Good evening. This is Duane Lowry for the DPP Grain Desk on Sunday, March 3rd. It's about 4:45 in the afternoon. Opening calls, I think, are probably leaning a little bit easier. We don't have much here for news. Weather is always an initial focus for grain traders on a Sunday night. I don't see South American weather as having a whole lot of market influence and really hasn't been connected to any daily intraday price action swings on any consistent basis here for a couple of weeks at least. U.S. Weather is getting a little bit more attention every day. I'm not sure that it's having a direct impact on price action or a consistent and confident impact on price action, but it's something traders are talking about every day. The outlook for moisture for the U.S. plains is pretty good. It's improving, especially as you get farther out into the 6 to 10 day period. U.S. Midwest has got increasing moisture opportunities, certainly welcomed in the northwestern areas. Snowfall may not be as great a precip as rain when the temps warm up, but it's certainly beneficial and welcome. So I think you got weather spin will be a little bit bearish to begin with. Price action on Friday was constructive in that it helped to define last week's bottom, last week's lows as notable, and I think that so it's supportive from that standpoint. Beans price action was weak in that it was able to stay weak. Short-term technicals on all of these markets seem a little bit vulnerable to some weakness here to start out the week, but I think support levels are going to build in wheat near or probably above Friday's lows. Support levels in corn will certainly be found not too far below Friday's lows. We're talking about probably about a dime below Friday's finish is where notable support develops in wheat and corn. And to be able to build any downside momentum below those levels is probably not likely to be sustained very well. The soybean market might appear a little bit more vulnerable to weakness here to start the week out. Certainly capable of pushing below last Friday's lows. Those levels are probably about a dime below Friday's close as well. To get beans down, more than that is certainly a possibility. But the overall conditions of the marketplace are pretty well improved from where they were 2 weeks ago. Last week's price action was supportive. The liquidation process is over. We've established pretty significant bottoms here. Your fundamental driving support, I think, is going to be the corn market and the need to ration supplies. And the idea is that the cash market is so strong, and we're going to lead to a cash-driven, old crop-driven, old crop gaining on new crop type of price rally in corn. We've already had a good start with price recovery during the last 4 or 5 days. So any weakness here in corn is going to be well supported, and I think you're looking at opportunities for corn to have 75 cents of upside potential. I don't think is unreasonable. To see May futures trade 7.75 would not be an unreasonable expectation. If you're able to get there, who knows, you go another 25 cents. I think the market will be very well supported. In the case of wheat, the wheat market is weak. It's at the bottom end of its price parameters, but it's already had a lot of selling absorbed into the marketplace. Last week we had talk of increasing moisture and had some days where we had bearish weather spin. Each and every time the market rejected that, so I think that news is pretty well priced in. You've got U.S. wheat prices extremely cheap on the global pricing arena, so to see additional downside energy there I think is unlikely. U.S. wheat exports are likely to improve here over the next 90 days, so I think you got a market there that will be well supported. Plus, the corn market should help to pull up the wheat as well. However, when you look at the wheat and how cheap it is versus corn, how cheap it is from an intermarket perspective, how cheap U.S. wheat futures are, and U.S. wheat is compared to global markets, and then you ponder how much speculators are aggressively short that market, I think you have a situation that wheat could rally much more than what prevailing sentiment would suggest. And prevailing sentiment really is not very friendly wheat. They're looking at cheaper new crop values ultimately ahead, and I think you have the potential here of trapping a lot of people to bearish wheat. And I think that over the next 60 to 90 days, wheat's got a lot more upside potential here than what people think. As far as soybeans are concerned, the transportation bottlenecks in South America is causing demand that still have to come to the U.S. for supplies. old crop U.S. soybean stocks are tight. We still have a window of opportunity here where the old crop futures can sustain and sponsor a rally. As we talked about for quite some time, an ultimate upside target for old crop futures is probably something in the $15 to $15.50 range. To be able to push prices beyond that may be somewhat limiting. Ultimately, we may see prices head lower, but for right now, I think the soybean market will be well supported on weakness here. So if we see weakness early this week, I think it's probably a buying opportunity. As far as corn is concerned, you still have a situation where the cash market will be the big dominant theme. Yes, the new crop outlook is bearish, but it's fully known, fully factored in, and you still have a whole growing season of unknown possibilities there. So I think being bearish, D's corn at 550 levels, the opportunity for downside potential from 550 for the next 30 or 60 days should be very limited. So overall, I think we're dealing with a market that has upside potential and early weakness this week. Probably will be limited, and I think will be reversed as the week unfolds. The DPP grain desk has been Duane Lowry. Thank you.